Hi, and welcome to 3 Minutes with Mark. Today what I want to talk about is goodwill. Now, goodwill is important because when you're selling a business, it's critically important to understand what the goodwill component is. What is goodwill? So it's basically the difference between what you're selling a business for and all of those other assets that you can physically identify, like buildings, trading stock, depreciable assets. So that if you buy a business for $100 and all of those assets are $60, then $40 is goodwill. It's pretty simple. But the difficulty is that when there is a sale transaction between a buyer and a seller, there's always tension that occurs, particularly when you're writing up the contract. Because from a seller's perspective, they're always trying to maximise their tax outcomes. And the way they try and maximise that is to allocate more of the purchase price to those components that are tax deductible, whereas the seller is trying to always capitalise on the capital components and increase that part of the bargaining situation. So inevitably what you get is a bit of a fight and each party trying to get to terms with and trying to negotiate the best outcome. Now there's a very important High Court decision which has just come out late last year. It's called the Place a Dome decision. And what this decision is about, it's actually about WA land duty. So you'd think, well, what has that got to do with income tax? But it's got a lot to do with income tax because it looks at goodwill from the perspective of land duty in Western Australia. And what happened there was a landholding company was purchased for $15 billion and $6.5 billion was attributed to goodwill. Now, they were trying to work out whether or not it was a land-rich company, and the value of goodwill was really important to that determination. In the end, the majority of the court indicated that, look, goodwill, central to the concept of goodwill, is the ability to attract customers, and they just didn't see it in this particular company. And because they didn't see it and they didn't agree with the accountant's point of view of what goodwill was, land-rich, it was taken to be a land-rich entity, and duty applied $54 million later, duty to the revenue. So really important to understand goodwill, not only in the sale context, but also when it comes to duty. What are the takeaway points? Really important to understand that goodwill is a difficult topic to come to grips with, particularly when you're negotiating as between a buyer and a seller. You both need to negotiate hard. Expect that. If you cannot apportion the purchase price to goodwill and to the other assets, then upon ATO audit, the ATO, whilst they accept a reasonable apportionment, the $64 question is, what is that reasonable apportionment? So please beware. That's all for today. Please keep in touch. Speak soon.